The regulators are cleaning up the space. The message in the United States and Western Europe clearly is the future of crypto is Bitcoin. Bitcoin is the one thing every crypto exchange can buy, can sell, can hold.
In today's video, Michael Saylor, Executive Chairman of MicroStrategy, discusses Bitcoin ordinals, transaction costs, MicroStrategy's long-term vision, and the future of money.
We've moved through a difficult year of rationalization, and if you roll the clock back about 12 months, the entire crypto industry was fairly confusing, fairly chaotic, but there was Terra, there was Luna. If I go through all of the meltdowns, Terra, Luna, Three Arrows, Genesis, Voyager, Celsius, BlockFi, Alameda, FTX, right? Each of those cascading, taking us into 2023, where now we have just a barrage of regulator lawsuits against DeFi exchanges, against crypto tokens, against crypto exchanges, against crypto staking protocols. And if I were to look at the big picture, I would say the big picture for Bitcoin is it's trading somewhere near the 4-year simple moving average. So normally in bull runs, it moves above that simple moving average, and then bear markets drive it kind of down to the moving average. But if you think about the 4-year simple moving average, it means that for the past 1,400 days, people have been paying this much or more for Bitcoin. So I think of Bitcoin as like a bank in cyberspace. And when people buy Bitcoin, they're putting their money in a bank. So if you ask the question, how much did everybody deposit in the bank? Looking at that 4-year simple moving average kind of gives you an idea that for the most part, that's the amount of money that was put in the bank. If I was trying to come up with like a book value for Bitcoin, I would look at the 4-year moving average for Bitcoin. If tomorrow Bitcoin was trading, it just jumped up to $100,000 a coin on low volume, and it was 4 times the simple moving average, you would say, well, that's a bit rich. But if tomorrow it spiked down to $5,000, and you're saying, well, it's like 20% the simple moving average, you would say, well, it seems like that's being artificially suppressed. Everyone that actually bought into Bitcoin paid a lot more than that, and so they're probably not going to sell for that. So I see Bitcoin as having a pretty strong fundamental base here. If I look at all the things holding it back, 25,000 coins or crypto token confusion, that holds it back. If you're not sure about the difference between BTC and FTT and Terra Luna, that holds it back. When UST and FTT and Luna and the like, when they all melt down, then there's a lot less confusion. Not knowing the difference between the Bitcoin network and the FTT network, if they're both equal, like if FTT is just a much quicker, cheaper, less energy intensive version of Bitcoin, I mean, they're both blockchain things, that holds it back. At the end of the day, of course, FTT was like backed by a couple of people, and you pinprick it and it collapses to zero. And Bitcoin is backed by 400 exahash, which means more energy than the entire US Navy uses and more computer power than all the other computers on Earth combined. Right? If you understood it like that, you would say, well, Bitcoin is the most powerful, secure computer network, and the other tokens were just kind of spun up tokens. So over the last 12 months, everyone that thought it was a good idea to short Bitcoin went bankrupt. Everybody in the business of taking your Bitcoin and then loaning it to someone else who's going to invest in a DeFi crypto token protocol went bankrupt. Everyone that was not committed to holding Bitcoin for the long term, but willing to loan their Bitcoin to another crypto bank to rehypothecate it, went bankrupt. And so what you've got is, and everyone that thought that FTT token or Luna token was just as good as Bitcoin, they're either bankrupt, or they're bankrupt and on the run, or bankrupt and about to be in jail. And so what's happening here? Right, the free market is shaking out all the crypto pretenders. All the next Bitcoins are getting shaken out. And FTT is obviously not the next Bitcoin. Solana and Cardano are obviously not the next Bitcoin. They're unregistered securities according to the SEC, which means they're not commodities at all. And if you're not a commodity, you can't be a global money or a global property because you're going to be regulated. There's an attack surface. Like if you were a registered security, you're not going to be a global property. Like Apple and Microsoft and Facebook and Alibaba are not going to be global properties because they're registered, regulated securities. But certainly an unregistered security is definitely not going to be a global property. It's not even as good as Apple, and Apple is 100 times weaker as a property idea than Bitcoin is because it's security, not a commodity. So we've had 12 months of regulatory clarity. We've had 12 months of shakeout of unwise leverage and foolish leverage in the system. We've had 12 months of people that are lukewarm supporters having their Bitcoin taken away from them. It's unfortunate, it's tragic in many ways, but if you trust your Bitcoin to an altcoiner like Sam Bankman-Fried, well, he crashed his altcoins and he also took your Bitcoin and he panic sold your Bitcoin. So who's left holding Bitcoin right now, right? It's the true believers. What's the price of Bitcoin? It's trading near the 4-year simple moving average. It's not trading up at 60,000 where it was like at 3 or 4 times the 4-year moving average. It's got a strong base in it. The regulators are cleaning up the space. The message in the United States and Western Europe clearly is the future of crypto is Bitcoin. Bitcoin is the one thing every crypto exchange can buy, can sell, can hold. The accounting treatment for digital assets like Bitcoin is being clarified. And if we move from indefinite intangible accounting to fair value accounting, it opens the door for Microsoft and Google and Amazon and Facebook to buy billions and billions of dollars of Bitcoin and carry it as a treasury asset. So I like all the fundamentals. I don't like how we got here. It's been painful. But, there's no simple way to introduce, a new idea into the world. And there wasn't going to be a simple way to educate the entire marketplace on the benefits of Bitcoin. So all things considered, I think we've made a lot of progress in 12 months.
Do you think, I think that fair value accounting that you mentioned there is very significant in its implications. How likely is it, my finger's just not on the pulse of accounting, so I don't know, how likely is it that it is going to become a thing as you described?
Well, right now the consensus in the community is that, including the accounting community and the FASB committee working on this, is that it's going to happen. So we believe it will happen. The procedure's been public, and you can track it. They move through about 3 stages of the procedure, and at every stage, it's been the idea of moving from the current indefinite intangible accounting to fair value accounting has been reaffirmed. There doesn't seem to be any substantial dissent anywhere within the FASB or outside in the industry.
So is FASB the American Accounting Association or something?
FASB is the global accounting body that controls GAAP accounting or provides GAAP accounting guidance. So they're the regulator, or they're the accounting organization that will provide the guidance that all publicly traded companies and all GAAP-based companies will follow.
Okay.
And so they're running the process, and all of their process is public. You can follow it. And the guidance right now that we hear from accountants is that sometime toward the end of this year, they'll give definitive guidance, which means that in 2024, I would suppose, companies that are holding Bitcoin or buying Bitcoin or considering it will have a much stronger accounting treatment, a much more beneficial accounting treatment for carrying it on their balance sheet.
MicroStrategy does it, a few others do it, but it hasn't become a mainstream thing. But corporate buying, the implications of corporate buying are a lot more significant perhaps than the implications of retail investors buying. So that would be transformative.
Yeah, it's really not possible for a GAAP-based corporation to buy this in volume when you have indefinite intangible accounting. Indefinite intangible accounting is the accounting treatment you would give to any asset you wanted people not to buy. Like if I was certain I did not want you to buy it, I would assign indefinite intangible accounting treatment to it. Because what it means is you can never generate an investment gain. You can only generate investment losses. They ratchet down to zero. And you can't even book them as investment losses. They end up being booked as operating losses. So if Facebook were to buy $10 billion of Bitcoin and make $100 billion on it, but Bitcoin traded down 50% before they made the $100 billion, what the world would see is that Facebook's core business made no money, that they lost $5 billion in the core business because it's an operating loss. And then the world would think that they had $5 billion in assets instead of $100 billion in assets. So you see, there's no way the CFO of Facebook is going to take that kind of volatility and toxicity on their P&L. It screws up all the operating reporting, and it also screws up the balance sheet. So that's why it hasn't happened. The reason that fair value accounting is so much better is because fair value accounting splits the balance sheet accounting from the P&L accounting. So when I buy the 10 billion, if my core business made 5 billion, then I show a $5 billion operating gain. And then if Bitcoin trades down 50%, I show a $5 billion investment loss. So I separate the two. So investors in about 10 seconds can see that there's no problem with the core business and that the volatility came in the balance sheet. And then when Bitcoin, if it were to go back to 10,000, you'd show a $5 billion investment gain the next quarter. And so you reverse it. And if it were to go up by a factor of 10, you would show $90 billion of investment gains to follow, you see. So, but when you have the gains, when you have $5 or $10 billion of investment gains per quarter, you would separate that from the $5 billion of operating income a quarter. So if you're an outside investor, you can say, okay, I can see this is the balance sheet contribution to the earnings. This is the operating contribution to the earnings. If you're a CFO, you can defend that. Now, imagine if I collapse that and I said, well, there are no investment gains and your operating results are awful. And now you're the CFO and you have to go in front of your outside shareholders and explain how you screwed up the core business and the balance sheet has nothing to show for it. Okay, now you've got a problem, right? So you can't really expect a big publicly traded company with a healthy business and a set of shareholders that understand the core business to really want to get heavily into Bitcoin. That's why the Teslas and the blocks of the world, they've invested, you can invest 5% of your capital or 2% of your capital. But when you get to the point where you invest 50% of your capital and you could have a material swing in the quarter, it becomes very confusing. So yeah, the accounting does matter. And it'll be beneficial when it goes to fair value accounting. If you want to introduce a new asset class, and when's the last asset class introduced into the corporate world, right? Not in our lifetime has there been a new one. I mean, corporate treasurers have basically invested in sovereign debt, treasury bonds or corporate bonds maybe for the last 50 years. So you want to introduce a new asset class. Well, you need to normalize the accounting. You also need to normalize the regulatory disclosures, like the SEC disclosures. There's a lot of nuance about, well, how do I even disclose what I've got on my balance sheet and how it affected my P&L, right? And so the accounting drives that. And then you have to normalize the guidelines for banks. Like, is a bank allowed to own or hold Bitcoin, and how is it treated as collateral versus having real estate loans or securities or sovereign debt on your balance sheet? So, we've been working on this for 3 years, right? The accounting industry's been working on it for 3 years, since 2020. It's 2023, so maybe over the course of 4 years, they will evolve. Generally, the regulators will evolve over 2, 3, 4 years, but I mean, a year is like light speed. It doesn't happen in a year. No. 4 years is more likely. So I think that when we go into 2024, I think there'll be a lot more clarity about a lot of these disclosures. Just like, for example, the entire crypto industry is now starting to realize that there's a difference between FTT token and Solana and BTC. But 12 months ago, there would be massive debate getting people to accept the idea that there's something like a crypto security. The entire word, crypto asset security, that has been introduced and adopted in the crypto industry But 24 months ago, they didn't have that phrase. Like, people didn't recognize that. They weren't willing to even embrace this issue. So you can't really move forward until the body of industry investors understand the difference between a digital currency, a digital security, a digital token, and a digital commodity. And 24 months ago, people didn't understand the difference. In fact, you have to get every
I'm not even
senator.
sure I do now, Michael.
Okay, so that's the primary point. Every senator, every congressperson, every governor, every mayor, every billionaire, every corporate CFO, every journalist in the finance industry has to understand the difference between those things before we can move forward. A digital commodity would be an asset without an issuer, like Bitcoin.
Mm-hmm.
A digital security would be a digital asset with an issuer, like Solana or like Algorand, where you've got a controlling body that creates the protocol, and they govern it. A digital currency would be a stable coin like Circle or like Tether. It purports to be the US dollar as a bearer instrument and a digital asset. A digital token might very well be like an NFT, like a piece of art, right? It might be a non-fungible token. It might be one of one, or it might be Tom Brady coin, right? The 10,000 superfan coins that Tom Brady issues, and they all get to come to his house for a barbecue every month, right? So if you understand those things to be different, then a digital exchange is something that could trade them all, right?